Safaricom. When you look at Safaricom as a whole, the company is doing so well, revenues increasing. But as I said in that handout, ladies and gentlemen, as an investor, I would really be willing to look at the components within Safaricom. If, for example, I have like Safaricom having like say 5 major products, which I'll call my segments, and then I realize that it is only one product, like in this case here, called M-Pesa, which is the star product. Only one product is shining, a star. And then the others, like the voice revenue, is going down. Then that is a cause for what here? Worry, because Safaricom then will be said not to have diversified very well. If you remember, there is a time WhatsApp came and said that they would want to start WhatsApp money, right? And Safaricom was so much worried because they know that they are really holding on to M-Pesa as their beacon of hope. So, and that is why it is important, ladies and gentlemen, whenever you're looking at these financials, whenever you're doing financial analysis, always ask for segmental reports. Ask for reports that are able to break down an organization into various segments. These segments could be in form of products or services, right? The segments could be in form of what are geographical areas. Like, for example, when I go to a hospital like Kenyatta National Hospital, ladies and gentlemen, of course, they keep their sets of accounts so nicely for the whole hospital. But I would be interested really, even for purpose of performance appraisal, I'll be interested to know how each and every segment is operating. So, for example, I would want to know how much does the dental unit generate to the whole profitability of the company? How much, in this case here, does their mortuary, I know that's a language they will not want us to use, does their mortuary segment contribute to the survival of the company? Ladies and gentlemen, when we present information on segmental arrangement, then at the end of the day, we shall be able to monitor our risks as a company nicely. We shall be able even to motivate our staff further, better, right? We shall be able to do what we call management by exceptions. If we realize that there is a department that has got so much potential, then, ladies and gentlemen, we will easily be able, through looking at their own results, we'll be able to know where to touch, which cogs do we touch, to ensure that that department that is not exploiting its full potential should do, to be able to reach up there. Ladies and gentlemen, also when we are talking of segmental reporting, remember there are those products, if you remember, product segmentation. There are those products in this case here that we call dogs. Segments that we call dogs. So we have that segment that for sure we are really trying to market as much as we can. We are putting in a lot of efforts in this kind of a product, in this kind of a segment, and then we realize that it's not picking up very well. So it will really help us even to think of areas to invest in, the areas to divest from, to throw away, to throw our capital, to harvest, right? To remove our capital from, etc. If a product is a dog, dog products are those products or segments, ladies and gentlemen, that don't generate anything to the company despite the efforts that you're putting in place. All right. So please allow me here to share my handout with you. It's going to be a very good session. Note this one. Just a minute. Great. And please don't run away. I'm so sure you guys, all of you will really enjoy it. This will be your best class. So then what I'll ensure is that all the students who will remain with me to the end, we buy them a present, right? We buy them a present. We buy them a present. The best present being ensuring that you guys will become CPA Kenya. CPA Kenya. So this is it, and this great, wonderful session is coming right from RCM Online College, which works together with RCM Publishers. And the key thing here is that really, you guys don't need to go to anybody's physical classes. Don't do that. You're wasting time. Why? Because Zoom classes work magic. And this is our number, 0719-525,000. So we have here segmental reporting. Segmental reporting is basically IFRS 8. IFRS 8. So when you talk of segmental reporting, it is what IFRS 8 wants us to be presenting. It's important. IFRS 8 tells us as much as you have your published accounts. You must also ensure that you present your financial information in the form of what your segments. Segmental reporting. And then in the public sector, we call this one here IPSAS what here? IPSAS 18. IPSAS is International Public Sector Accounting Standards. International Public Sector Accounting Standards. International Financial Reporting Standards. Remember IFRS, these are for profit-making organizations. Profit-making organizations. These basically are for the public sector, in this case here, non-profit and profit-making organizations. So when you talk of segmental reporting, we are looking at IFRS 8 and we are looking at IPSAS 18. Very, very important for us to know this. Great. Now, ladies and gentlemen, here we are. We are saying that the objective of IFRS 8 is to present information by line of business and or by geographical area. It applies to public listed companies and any entity voluntarily providing segment information should comply with the requirements of the standard. So if you have a company that is listed at the stock exchange, any company that is listed at the stock exchange must present published accounts in the context of segments. So any company that is listed, publicly listed companies must do what we call segment what year reports. Very important for us to appreciate this from the word go, ladies and gentlemen. We continue. We are saying here, so why is it a good thing to have information by line of business, by line of business and the geographical area? Well, imagine you are a Safaricom shareholder. You will naturally be interested in how well the company is doing. That information will only make real sense, though, if it was broken down into product segments. For example, if most of the profits of the company are coming from one segment only, say the M-Pesa segment, then this would be worrying as we expect other international players to come into this market soon. You would want to know how they are doing in their voice, data, etc. markets, as well as any new areas they may be diversifying into. Ladies and gentlemen, we are saying that, remember what I taught you last semester in advanced financial management. Any great organization must always seek to do what to diversify its operations. Any great organization must always seek to diversify its operations. So if it's RCM Online College, already we have books. We have books. I always put my fingers on my books revenues to see whether they are growing every other day. Then now we have, in this case here, these RCM online classes. The online classes for so long, we have only been doing CPA. Now for purposes of, in this case here, diversification, we have introduced CS this time round and ACCA and ACCA. ACCA now is taking us to the international markets. So when I'm bringing people on board, because later on the dream that I have, been a founder, member of this institution for so long, but I have a dream one day to have this organization listed at the stock exchange. When I'll be putting in a proposal to bring you guys on board, you'll not be looking at the revenues that RCM makes as a whole. If really we are doing very well, we must show you that we are doing well in all fronts, right? In all fronts. That is how you will be able to have a farm that will be able to withstand whichever shocks that comes its way, like the pandemic called Corona here. If you look at the organizations that were able to survive, ladies and gentlemen, trust you me. If, for example, Safaricom never had this M-Pesa thing, I'm so sure even during Corona, it would have really been affected. Their revenues would have gone down, say, by 50%. But because of their diversification, and they're so strong in most of the areas, they have diversified in. Because of their diversification, these guys, in this case here, they were able even to do much better than in other years. Right? So the concept is here that it is always important, ladies and gentlemen, for us to showcase the performance of these entities on the basis of the product lines, so that in shareholders, future shareholders, will be able to make water informed decisions. Existing management will be able to make also informed water decisions. They'll be able to know where to put in most of their resources in, right? And of course, any other decision, ladies and gentlemen, segment reports are very important. They are very important. They are very important. Now here we are. Key definitions. Business segment, like now the M-Pesa segment. A component of an entity that provides a single product or service and is subject to risks and returns that are different from those of other business segments. Ladies and gentlemen, a business segment basically is like a department that is able to stand on its own. Like now we have an M-Pesa department, right? The risks which are affecting M-Pesa department will not be the same risks, of course, are affecting what here? The voice department, the calling department, right? So here we are able to see different revenue streams from M-Pesa. We are able to see staff, employees of M-Pesa alone. It's something that can stand on its alone, on its own. Ladies and gentlemen, listen and listen to me very well here. And please remember, especially for those of you who have our app, if you have subscribed to our app, you don't need to be writing down these notes. Why? Because already this handout is in your app. You'll simply go and do what here? Just download it, right? And remember, our app is offline. You're able to watch whatever videos you have offline without internet. So don't keep on writing, or rather, if you're writing notes, make sure that they are high level. Okay, so here we are. Ladies and gentlemen, here we are saying a business segment, like the M-Pesa segment. It's basically a department. It's a component of an entity that provides a single product or service and is subject to risks and returns that are different from those of other business segments. Geographical segment, like now the region, like the African market, a component of an entity that provides product and services and is subject to risks and returns that are different from those of component operating in other economic environments. Ladies and gentlemen, the most important thing you're supposed to know, you can decide to present Safaricom's, for example, revenues in the form of segments. And these segments, in this case here, could be geographical this time round, right? Like if you remember, there is a time when EABL used to do this segmental revenue analysis. EABL, for so long, wakati wa Moi, for those of you who are as old as Mwalimu, wakati wa Moi, EABL used to do segmental revenue analysis. So revenue analysis, this segment was geographical segmental revenue. And what they could do, we had 8 provinces. And each province, they were simply saying that we have gotten, for example, 20 million from Mount Kenya in the first quarter, right? So Mount Kenya region, so different environment, different geographical areas like that. Now, remember when they were doing this, every time we had a different, or rather we had a certain geographical area winning in terms of giving them the highest beer revenues. They used to give some kind of a trophy. So unfortunately, that trophy never left Rift Valley. It was always Rift Valley that was winning that trophy. Moi akapiga hesabu akaona, hey, hii direction ni mbaya. akasema hiyo mchezo hataki. But of course, since then, Kalenjins are no longer drinking as they used to drink those days, right? Nowadays, all of us have known that beer is what here? Beer is bad, right? So when we talk of geographical segments, we are looking at what here? Different areas of what here? Areas of operation. So like if it's a multinational, like Unilever, they would want to know how are they operating in the African segment? How are they operating in this case here, for example, in the European markets, like that? So when you talk of business line segment, you're looking at products or what here? Services. When you talk of geographical segments, we are looking at different areas of operations, different areas of what here? Operations, different areas of operations. Great. Now, ladies and gentlemen, when we talk of this concept of an operating segment, operating from the word operations, it engages in business, even if all are internal, whose results are regularly reviewed by the chief operating decision maker, like the CEO or the board of directors, and for which separate financial information is available, So when we talk of operations, operating segment, these are those segments here that will be engaging in their own kind of business, whose results are regularly reviewed by the chief operating decision maker. It could be the CEO, it could be the COO, it could be the board, and for which separate financial information is available. It earns revenue and incurs expenses from a business activity. Is regularly reviewed by the chief decision maker when handing out resources, has a separate financial information available. Now listen and listen to me very well. Where I work, ladies and gentlemen, I work for a software company. Now this software company, we have various segments. So we have, in this case here we have one business, like right now we are doing implementations for EABL. They have brought in some newer of our products there. So we'll have, in this case here, like the implementations department. And then we have, in this case here, the training department. Now, ladies and gentlemen, listen to me very well. So we'll go implement the software at EABL. We don't expect EABL, in this case here, to start running. There must be some competence development needed for their staff. So in this case here, the training department is very important. So there are companies, in this case here, that will buy the software and they're able to get their technical knowledge, technical know-how around the system, and they run away with it. They don't need any competence development from our side, especially if they have got serious auditors. Most of these serious Big Four firms, they know our system very well. So if they've got serious auditors, they can opt to get that competence development, to get that knowledge from the auditors. But in most cases, they get this knowledge from us and we charge them. So what will happen is that our training department, ladies and gentlemen, which is the academy here, will come and charge like 20,000 per person they want us to charge. So in this academy, I have my own lecturers, ramping salaries. I have my own expenses. I'm developing standards, etc. So what I would want you to appreciate here is that, of course, every time I want to raise any resources for my department, I have to do a budget for this department. I have to present my budget to the chief decision maker, who is the CEO. The chief decision maker could be the board of directors. The thing is, ladies and gentlemen, for you to be seen to be an operating segment, you must be making your own revenues. You must be having your own expenses, meaning that you must be having your own operating profits, and the decision makers must be having an interest in seeing that particular segment growing. You must be giving reports to them. You must be doing your own budget to them like that. At the same time, these guys are also doing their own. They're bringing in. So for us here, our segments, ladies and gentlemen, for those of you who are doing advanced management accounting, our segments are supposed to be profit centers. They're supposed to be profit centers. They're bringing in revenue, we are incurring cost, and then we have the concept of the chief decision maker or chief decision making organ. Ladies and gentlemen, we continue with this. Those theories are very important to you. You'll be able to see when you go to your past papers. Now, so therefore, the head office cannot be an operating segment. Can somebody tell me why? Why do you think in this case here can't we have the head office of an organization? Why can't we have the head office of an organization being an operating segment? Why can't we have the headquarters, the head office of these organizations being an operating segment? Someone talk to me. Someone talk to me. It's not a profit center. I love that. It's not a profit center. It does not have revenue. Remember, the head office is simply there to do what? To guide. The head office is simply there, ladies and gentlemen, as a cost center, right, for administration purposes. So they don't have any revenue of their own. They don't have any revenue of their own. So are we together? It simply controls branches. It is a branches which are working. Thank you very much. You guys have understood this very well. Thank you very much. You guys have understood this very well. And if you allow me, I'll be able to continue. If you allow me, I will be able to continue here. So we are told here, at the end of the day, ladies and gentlemen, is that we must aggregate some of these segments. We must put together some of these segments, right? Right? Operating segments can be aggregated together only if they have similar economic characteristics, such as similar services or similar products, similar production processes, some similar sort of customer who comes and picks goods from department A, department B, right? Similar. So we are sharing customers. We would rather in this case here lump up those departments and even call them the name of those customers like that. We have here similar distribution methods. We have similar what here? Regulations, similar regulations. Now listen and listen to me very well. Listen and listen to me very well. When we go, for example, to EABL, we'll get EABL, ladies and gentlemen, having quite good segments. For example, they'll be doing geographical segments. We know, like right now, EABL is doing very serious business in Tanzania through the subsidiary called Serengeti Breweries, right? So we have the Tanzania segment, Kenya segment, we have the Uganda segment, and then we have other segments. Of course, for those of you who have ever traveled out there, when you go out there, you'll only get one brand of EABL. Like if you go to South Africa, you'll only get Tusker. So you can now consolidate all those other small markets out there and give them one name and a segment called others, right? Others. The other thing, ladies and gentlemen, you guys are supposed to know is that when we talk of aggregation, so when you talk of the Kenya market, we'll not again start saying, for example, in the Kenya market, we have Tusker. No. Now we have aggregated every brand of EA. We have put them together in the form of what are geographical areas. We can decide to put together these brands in the form of, for example, like now we have the wines. We can have a sector called spirits and wines. We don't want to know where this wine is coming from. We don't want to know which model of wine. So long as it's a wine, we put it in the wines basket. We can have another segment, in this case, ladies and gentlemen, where we, for example, talk of soft drinks. Of course, the EABL has got some soft drinks, right? Water. We have some great, what name do we give them? Is it Novida or whichever, right? We put them together like that. So it depends. You can decide in this case to lump these things in form of products, in form of even markets, in form of what here somebody, in form of customers, in form of processes like that. And then you aggregate them together like that. Now, ladies and gentlemen, here we are. We move on to the next thing. We are told here quantitative threshold. Now, this is what is important in your exams. Quantitative threshold, this is what is important in your exams. Any segment which meets these thresholds must be reported on. Profit is 10% or more of all profitable segments. This is something that is very practical for those of you who are working for big organizations. It is something you see your seniors doing, or rather you could even be doing it yourself every other day. So unaangalia kama ni RCM online college, tunaangalia profitability. ACCA imetoa profit for example ya 10. Tuko na CPA imetoa for example profit ya 20. Tuko na for example another one like you've introduced also CFFE. So CFFE, ladies and gentlemen, imetoa profit ya 2. So assuming these are the only profitable segments, could you kindly give me this total? The total profit is 32. The total profit there is 32. So then I'll go to the individual percentages. ACCA is giving us 10 over 32 times 100. Could you kindly give me this percentage? Could you kindly give me this percentage? 10 over 32 times 100. 10 over 32 times 100. 10 over, 10 over, somebody is telling me it's 31 point something, isn't it? 31.25. What do you think of this percentage vis-a-vis our threshold of 10%? What do you think of this percentage? What do you think of this percentage? It's a pass. It's very high. It's more than 10. It meets the criteria. It means that ACC has to be reported as a distinguishable component, as a distinguishable segment. Of course, I don't have to do any test with CPA. 20 over, that's over 60. How about CFFE? CFFE is 2 over 32. We need to be able to pass that threshold. Itaruka kweli kizungu ni ngumu. Itaruka kweli 2 over 32 times 100. Below. So in this regard, we can only, according to the standard, we can only report in terms of segments, ACC and what here? CPA alone. ACC and CPA alone. I've always seen this being given to accountants in interviews. Somebody will think that so long as you're able to see a different product is a segment. No. Segments, we have got what we call materiality. The materiality of 10%. If it's below 10% like CFFE, this is what you're immaterial, then I'll not be able to bring it out as my segment. We want you to report on material segments, not we, but IFRS 8, IPSAS 18 wants you to only report on material, and our materiality threshold is 10%. This always comes in your exams. When you go to your past paper, you'll see. Then we have also the concept of what your 10%. 10% in form of what here? Assets. In form of assets. Now, listen to me very well. I have an example here. I've got 5 departments being presented to me. I have external revenues and the internal revenues. Then I have profits. I have assets there. So I would want us, ladies and gentlemen, to do this past test. The past test. Are we going to have A going in, ladies and gentlemen, as a segment, or in this case here, a useless thing, a very small segment? So let us start with the revenue test. Tunaandika hapo kwa exam, revenue test. So revenue test. So we start with the first one, which is the revenue test, Now, ladies and gentlemen, we have to agree. You know why? Like now, when we will start this group consolidation, I'll be sending you all materials in advance. When I send you all the materials in advance, the only thing I would expect you to do, even if you don't read to understand, at least is to go through a little bit to save on, because like now today's class, I was prepared to do things quite heavy, right, from our past papers. So these simple topics, whenever I send you materials, I'll try to simplify those materials so that you only use like 30 minutes before our class to go through those materials. So next time, all those students will not be able to read my materials that I send you, and they are few and very nice. Little content, very nice. So all those students will not be able to read those documents before we come to class. We shall be punishing them. To agree, Peter, to agree what kind of punishment, What kind of punishment? Of course, these are mature people. You can't beat them. And even if I wanted to beat them, they are not here geographically, right? they're in different segments in Kenya, right? And even out, like now we have Mayom from Southern Sudan. So whenever I wanted to pinch him a little bit, where will I find him? So we'll have to think about a criteria of doing what you're punishing them. Perhaps giving them a fine, right? Yeah, we impose a fine on them. We impose a fine on them, right? We impose a fine on them. When we used to have physical classes, I used to send them away to bring their parents with them. So I talk to their parents because they don't want to do homework. Now that thing is no longer there. That thing is no longer there. That thing is no longer there. Great, great. So we start with the revenue. We start with the revenue test. The revenue test, remember revenue, it has got to be more than 10%. So revenue test. And remember, revenue, we always take both external and who? External plus internal. Because really it's all about your work. Yeah. It is really about your work as a department. If you are serving internal departments, no problem. So here, so here we are adding. So for revenue, I would want you guys to add for me. Please give me the total revenue. Please give me the total revenue. Please give me the total revenue, both internal and external. Both internal and external. Both internal. You can see A, it is 220 and 60 internal. So that will give me how much? Somebody please give me these figures. Somebody please give me A is supposed to be giving us what total revenue? What total revenue? They're not talking to me. They're not talking to me. That punishment should start almost immediately because they're not talking to me. They're not talking. 280. Thank you very much, Purity. 280. Now, if you've been able to take a screenshot of that question, it's important to take screenshots of questions. How about boy? How about boy? How about boy? Boy. So for boy, what do we have here for boy? For boy, you can see 315. Yes. Boy is 315. 315. Cow, I can see cow very well. The total revenue for cow is 75. For dog, the total revenue is 55 plus 5, giving me 60. And then we have a E, which is 60 plus 10, which gives me 70. Then could you kindly give me the total of the total? Please give me the total of the total. Please give me the total of the totals. I was almost saying tortoise. Wanasema 800. 800. Where are they getting 790 from? There are others who are saying 790. There are others who are saying 790. Where are they getting 790 from? Where are they getting 790 from? So it is 800. It is 800. And then my work this afternoon is very easy. It is to change this to percentages. So you divide this by 800. You divide this by 800. You divide this by 800. You divide this by 800 times 100, like that, times 100, times 100, times 100. Times 100 throughout. So in form of percentages, what do we have? Phoebe tells me A is 35%. A is 35%. Quite a serious department. A department that is able to throw in revenue of 35%. It's a department you have to respect you. So Phoebe tells me the next one is 39. 39.3%. How about cow? How about cow? How about cow? Who are these who are not punching their calculators? Who are these who are not punching their calculators? I'll not buy them lunch. I think here I have to dangle a carrot, because stick cannot work. So 9.4%. How about dog? How about dog? How about dog? How about dog? Dog percentage, 7.5. Thank you very much, Omondi. 7.5%. How about egg? How about egg? Egg, E for egg. E for egg. E for egg, 8.75. Thank you very much, Monica Muya. Thank you very much, Peter Nyongesa, 8.75. Now, according to your understanding, if you're told in this case here to give us reportable segments, which segments will you take here to be reportable? Which segments are reportable? Which segments are reportable? Which segments are reportable? Which segments are reportable? Do you still remember our threshold? Our threshold, ile hurdles kukimbia ni 10%. Ukivuka 10%, umevuka. So it's A and B. So in this case here, given the revenue, The revenue test, it's only A and B that will be reportable. So A and B are reportable segments. The others are not reportable because they are what here? Less than 10%. Yani waliambua ruke paka wapite 10% ile kihado. Au naruka unapita chini, madwarf. Unapita chini namna hiyo, so not reportable. B is 39.4. Thank you very much for that correction. I'm being told B is 39.4, rounding off error. Thank you very much for that. Now, is there any other criteria you as an accountant you'll be able to ask your juniors here to look at for you before you say, hey, these are the only ones that I'll report on? Is there any other past test you expect to be applied? Profit. Thank you very much, Shem. Profit. So come here, profit, come here, profit. So come here, we have the profit. Come here, we have the profit. So profit is quite easy. So profit. Yes, I've seen what as period is also saying. So in form of profit, what do we have? We have 60-50. We have 20 negative 11, and then E, we have 14. So could you kindly give me the total? So that junior accountant at your workplace, could you kindly give me the total here? Let me tell you what the junior accountant at your workplaces will do. Please come and give me the total. Remember, when you're looking at the profitability past test, we only use profitable segments alone. If there is any loss-making segment, we always remove it. If there is any loss-making segment, we always remove it. If there is any loss-making segment, we always remove it. Remember what we read up here. Remember what we said up here. We said it is profit 10% or more of all profitable segments. So meaning that D is not profitable, it cannot really participate. It can't participate. So they're telling me this is 100 what here? 144. Now with that, I should be able to do my percentages now. So we start with A. A is 60%. No, not 60%. Look at me. It is 60 over 144 times 100. I was almost going wrong there. You guys would have also punished me. You'd have asked me to go and bring my old man from home. So somebody, Shem, tells me this is 41.67%. Thank you. So please go to B. B is 50 over 144 times 100. Please give me the one of boy. So the one of boy, I'm being given which figure? Somebody for boy. 34.72. How about cow? Before I answer, some good student there. Cow. How about cow? 13.9. So cow is 13.9%. And then we have E. Lastly, E. E will be what here? Somebody. Lastly, E. 14 over 144 will be 9 point what here? Somebody. So a good lady here is asking, Mwalimu, why are you not including this negative 11? Why are you not including D? It's because of what the standard tells us. Remember, the standard is there to guide us. If you go to that standard, and ladies and gentlemen, please, if there is anything that I would want to recommend to you this afternoon, I would want, if possible, I should be able to send you these links to the standards. You need to be reading the standards because you're going to become very senior accountants. Like me, what helped me to get my current job, on top of Excel knowledge, it is a knowledge that I have over standards. As I told you yesterday, I normally challenge these accountants, even at ISPAC. I strongly believe that I could be among the top cream accountants in this country. Actually, in the region. Mwalimu unajipigia kidole sana. Unajipigia debe sana. Hapana. Because kama ni standard, ikija for example, just a simple thing like IAS2, inventories. I've read inventory IAS2 from cover to cover. Right? And then of course, I'm always there. You know, like the other week I was doing a very good course, and this is why I normally say I'm among the best, and usisikie mbaya. because wewe ni ule, unajua mtoto anakuwa mzuri kushinda mama. Mtoto anakuwa mzuri kushinda mama. Yani kinachozaliwa ni kizuri zaidi kushinda mzazi. Wewe utakuwa better. So like last week I was doing a very important course called XBRL. Right? It's a business reporting language. This business reporting language, chances are it's coming to revolutionize everything. It's coming in this case here to do away with systems like what here? IFRS. You know, IFRS believes in paper reporting. And if it's electronic, it believes in production of PDFs. Right? But when we talk of this extensible business reporting language, ladies and gentlemen, you're looking at a situation where we are able to prepare reports that are seamless. Reports, in this case, if it's EABL that you can track down and tell us for the next 10 years, you'll be able to draw graphs. Already XBRL has been adopted by 50 countries. Home here, we have Mauritius has taken it up. We have South Africa has taken it up and it's so serious about it. So what they do, they give you a template. Like their KRA in South Africa, they give you a template to report on, and you must report on that template using the XBRL, extensible business reporting language, which has got very good codes. Codes in this case here called what here? HTML, the markup language. So we are able to tag like expenses. You say, these are my wages. You tag them. When you tag them like this, and then these guys will insist that you must always use electronic money when you're making payments. So when you pay, like if it's wages for this month, already KRA knows you paid wages of this amount. If it's revenue is coming through electronically, through M-Pesa, through the bank, KRA is already able to know. So even before you file your returns at the end of the year, if it's in South Africa, KRA has a rough estimate of your profit. Right? Right? And now this is how even Kenya already there is something in parliament as relating to this. It will not go beyond 2024 before you see ourselves reporting on what we call XBRL. So I've already done this course. I cleared it last week. Very important course. I would want you guys also, if possible, always think ahead, because I would want to become relevant in 2025, 2026. I would want to become a big chap. Right? Quite a good thing. Right? So please try to read these standards. Even the IFRS, don't say that Mwalimu said it's going, no. Of course, it borrows quite a lot from this. Or that this is very limited. This tells you that for example, if it's first time adoption, only present 3 years. XBRL wants you to tag everything that you have all the way to the time you commenced. It's going to be big data. Right? And the moment you have tagged, we hope KRA will not do what I've seen other European countries doing. You know, the moment you have tagged all those expenses, if they're able to track down, so they'll be able to have dashboards, which will be able to tell them that, you know what, this guy ought to have paid 50 billion this year, but he only paid 10 billion. So we hope they'll not really move back that way, but it's something that is very important for you guys to think about, Great. Hiyo zuru wangu sikuange mchoyo, mimi nawaambianga. Hard work, yes. So that is it. So turudi back hapa. So ukirudi hapa, huyu mwanafunzi ambaye ameuliza swali ya negative. Tulisema hapa, profit is 10% or more of only profitable segments. Only profitable segments. That is why we excluded D, because D is a loss-making segment. We talk kabisa, kama loss-making unaitoa kabisa. I hope I've answered your question. So the only thing you guys never gave me was the percentage for E. Mko nayo mamuna. Percentage for E. Ziko hapa. How does it sweat? Don't sweat it out. The percentage for A was 42. B was 35. C 14. Dog in this case here nothing. And then E is 9% if I'm not wrong. E is 9%. E is 9%. Ladies and gentlemen, are those figures correct? Please talk to me. Are those figures correct? Are these figures correct? Are these figures correct? Are these figures correct? Are these figures correct? You guys are not talking to me the way you used to talk to me when I was teaching you advanced financial management last year. Talk to me. Talk to me as if you are talking to your father. You don't talk to your father, reserve, no, you talk. Yes, so they are correct. So if they are correct, then on the basis of profitability, which segments are reportable? On the basis of profitability, which segments are reportable? Which segments are reportable? Which segments are reportable on the basis of profitability, bearing in mind the concept of 10% threshold. Like A was more than 10%, B was more than 10%, C was more than 10%, but E failed. So in terms of profit, the reportable segments are A, B, and C. The reportable segments are A, B, and C. Is that correct? 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 Are we together up to here? Thank you very much. Wairimo, Kongo. Up to there, we are okay. How about assets? 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 So the assets are here. The assets are here. The assets are very easy to get because assets, I can see 5,000 out of 10,000 because I have the total there, right? So like A is 50%, B will be 40%, right? C is 300 out of 10,000. That is very small. That's very small. And then we have E also failing. E also failing. So we have C, D, and E. Those ones have failed. Those ones have failed. Those ones have failed. C, D, and E have failed. So on the basis of assets, we shall only have two reportable segments, which are A and B. On the basis of assets, we only have two reportable segments, which are A and B. So are we together up to there? 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 Hizo yes ni chache. Hizo usiogope pia kusema no. We are together. Thank you very much. Aha. Yes. Great. Great. Kuna wanafunzi jana wakiniongelesha hapa. Maybe they don't believe that I can be their father. They think I'm a young man. Franklin Bukala. Sijana ukiongea. Faith ni mwana ameongea sana. Fatma. Sijana Fatma akiongea. And Fatma is a friend of mine. Yes. Yes. So paka hapo tuko pamoja. So in short, ladies and gentlemen, thank you very much. In short, ladies and gentlemen, so long as a segment has passed, even if it has passed in only one, maybe it passed only in the asset basis criteria. So long as it has passed, then that is it. So in short, in conclusion, you're writing there, in conclusion, A, B, and C are reportable segments. Are reportable segments. Are reportable segments. Not considered. Which one did we not consider? When have we considered D? When doing the asset test. Asset test. We did the asset test. It's here. We did the asset test. We did the asset test. And the D is 300. 300 out of 10,000 times 100. 300 divided by 10,000 times what is 3%. 3% is less than 10%. Is less than 10%. So it has failed the test on the basis of assets. On the basis of assets, it has failed the test. I don't know whether I got your question very well. I don't know whether I got your question very well. Oh, okay. Franklin, you will overcome. Don't worry. Now I have known what these students are asking. That D was loss making. D was loss making. Should we disregard it when, for example, you're using other bases to evaluate? No, we only disregard it on the basis of profitability. We only disregard it on the basis of profit. Ikienda hapo mbele ipite, sawa, lazima taiweka kwa analysis yetu. Ikipita hapo mbele, sawa. So sijui kama nimejibu swali lenu sasa. We only disregard loss-making departments when you are evaluating them, on profitability. Otherwise, on the basis of assets and any other criteria following, we should not disregard them. Like now here, in terms of assets, we have omitted D simply because it failed. Its percentage is less than 10%. Its percentage is less than 10%. Haya, sasa kutoka hapa nitawapatia break. Karen anauliza, what if it passes the other criteria, you have to report. If it passes on the basis of the other criteria, you have to report it. Remember, those criteria are what they are very independent. You can see, like, there are other places where C failed. There are other criteria where C failed, but we are putting it still here because at least it passed in one. The concept is being able to pass in at least one. In one of those criteria. That is the concept. So long as you have passed in one of those criteria, that is it. Okay, great. Now the other question, rather, after this, I want to give you 5 minutes break. And in this 5 minutes break, I would want us to Google yourselves. I'm not doing it. I would want you to Google the segmental reports of EABL. The segmental reports of EABL. And then we'll be able to see what they have presented. The segmental reports of EABL. But before we go, there is something. The question will be, are we going to report these ones only the way they are? Or are we going to bring, listen, we have said that ABC are the reportable segments. But now we must ask ourselves, are we going? We must ask, this is very practical. I do these things in my office every day. Are we going to have a column of other segments, consolidating all the other segments here, or not? Very important. Are we going to have a column of other segments? Yani, wakati tunaweza kufanya segmental reports, utaandika ABC, alafu uandike other, ama utaandika tu ABC alone, ama utaandika ABC alone. So wakati ushasema hizi reportable segments, the question is very clear, and I hope everybody is able to understand this. Ukishapata ABC are reportable, fine. So we have to ask ourselves, are we going to have a column of other segments or not? For you to be able to answer this question, you must use what we call the external revenue test. External revenue. This is the last test. You must, in this case here, have external revenue test. Now listen and listen to me very well. I would want to know these reportable segments. What is their consolidated revenue? External revenue. What is their, so it is A plus B plus C. Can someone in this case here give me the total consolidated revenue of this? The total consolidated revenue of this. The total consolidated external revenue. Hizi sector start to peke yake. 220 plus 300 plus 75. Can somebody give me that? 220 plus 300 plus 75, who is able to give me this? They are not talking to me, and yet I'm introducing something that is very practical. Uzuri mimi kufunza financial reporting na kufunza something that is very practical. Thank you very much. I can see the figures are coming in. Thank you very much. Remember, we are only taking the external revenues. External revenue ya 8220. Ya boy umesema ni 300. Ya cow umesema ya cow ni 75. Of which wameniambia mwalimu, the total is supposed to be 590. Wameniambia mwalimu, the total here is supposed to be 595 actually. 595, sorry for that. So 595. So percentage wise, this will be 595. So the total reportable sales revenue of the three will be 595 out of the total company's external sales. The total company's external sales, it's 710 here. It is 710. It is 710. It is 710. 710. So in this case here, A, B, and C are able to cover what percentage? They're able to cover what percentage? 83.80. 83.80%. And remember, our threshold is 75% for this. Our threshold is 3/4. So long as the reportable segments that you have, ladies and gentlemen, are able to cover 3/4 of the firm's revenue, then don't bring in any other thing. Just report out those three the way they are. So you're going to say these are the segments we have, A, B, and C alone. Don't bring in other. We only bring in other segments column whenever this percentage covered is less than 75%. If, for example, you go to like 70%, then you must introduce other segments. So I'm giving you a break over how many minutes you have agreed. How many minutes have we agreed? How many minutes break have we agreed? 7 minutes. I don't know why Mayomi chose 7. 7 is okay. Let's work with 7. But remember, it's not even a break. It's a practical exercise. Please look for segment reports of EABL, segment reports of what year? Safaricom. Oh, okay. They understand. Great. Okay. So are we back, all of us, really? Are we back, all of us? Mayom, were those 7 minutes enough for you to eat something? Those yeses are very few. These guys haven't come back yet. Okay. So I saw some students saying, Mwalimu, you know what? We did not find segment reports of EABL. And of course, that told me something very nice, that we do not have anybody here who really drinks beer. There is nobody here who is a customer of EABL, because customers of the EABL must have seen their reports severally. True or false? I'm so sure all of you, just like my own, you must even be coming from church, right? Because how do you really partake a product from EABL for so many years and you've never bothered to read their financial statements? How do you consume, for example, our classes as a RCM Online College without really having ever bothered to see our financial statements? That's quite bad. Right? Now, I believe now all of us are back here. And now we are ready to look through this. So what you have ought to have done is to look for what is somebody for the annual reports of EABL. You simply look for the annual reports of EABL. Can somebody try doing that? Do you have laptops? Do you have laptops? Is there anybody who has a laptop here, or you are using your phone to join this class? If you're using your phone, it's unfortunate you can't do that. If you have a laptop, Sylvia, just look for the annual reports of EABL. Look for annual reports of EABL. And then once it comes up, you simply say control find. Control find. That window pops up, and you will be able to look for segment reports. I have something here. Let me share with you. Not restricted. I don't understand that language, my own, really. Is it the church which is restricting you, or what are you trying to say? I can see for 2020. Good. Thank you very much, Bansi. Yes. Yes. Now you can see, I don't know, I'll try to really change this to a way you guys can read, but at least you can see here we have segmental reports. Directors have determined the operating segments based on the reports reviewed by the group executive committee. You see the chief decision maker that are used to make strategic decisions. The group executive committee includes the group managing director and the group chief finance officer, meaning that they are trying to point out that it is the work of who? The chief decision maker to come up with operating segments. The group executive committee considers the business from a geographical perspective. Geographically, the group executive committee, sorry, am I recording this? I should be recording, sorry. Just a minute. Yes, it's recording. Thank you very much. Great. And are you able to see this thing the way I'm reading really? I'm also training. Next time I'll ensure that we'll be able to pull it in a way that you guys will be able to read much faster. But are you able to see something out of this? Rotate. Sorry. Every day is a learning day. Sorry for that. Every day is a learning day. I think that should be okay. Anyway, because I don't want to stay here for long, I've already known what the brother is saying there. We don't want to stay here for long. So we can see they have their segments geographically stated: Kenya, Uganda, Tanzania. Kenya, Uganda, and Tanzania. That is what I wanted you guys to see. And they don't have provisions for what year? For other segments. No provisions for other segments. Ladies and gentlemen, let's get back to our business. So remember, every time you are doing financial reporting at this level, this is a strategic level. After this, we expect you guys to go and practice finance out there. I would really expect you guys to be getting hold of the annual reports of these big companies, right? Like Safaricom, EABL, KCB Bank. Try to analyze them. Try even to compute ratios, right? Try to get the gross profit margin. Try to do these things, and if possible, even send them to my email address. I'll be able to advise you on what you can do even to make your analysis better, so that when you say you are a CPA out there, you will really be respected. So that after some time, we should be getting students here who are earning salaries of $1 million. Not this thing of people complaining that CPA is about the course, and yet they do not know. And yet they do not know what year. They don't have this technical knowledge. Yes, they normally use the same what year threshold, because those thresholds are normally given by IFRS. They're normally given by what year? IFRS. And you'll be surprised. It's because of those thresholds. Of course, we know, Mayom will tell you that we have breweries in Southern Sudan. That is why we don't have Southern Sudan there. Brewery products are selling almost all over, right? But because in those markets here, we have insignificant sales revenues, insignificant assets being there, they are not reportable. Thanks for that question. They're not reportable. So can we continue? Oh, we were having my own again. Great. Oh, it used to be there, but now you are importing. Too sad. Too sad. I know what happened just about 3 years ago. Yeah, but I know Southern Sudan is a strong country. It shall be able to come back very soon. Ladies and gentlemen, I would want again to take a break. But this break now, it's a serious break. I'm giving you an opportunity to watch some video of about 15 minutes. Please be very serious with that video. Be very serious with this video. This is a very important video that you guys need to do what here to really watch. Very important. Very important. Note that. Very important video. I have to expose you to practical things so that your exam can become just a useless thing. So please confirm you are able to see my screen here. I want to share with you some video. Are you able to see my screen? 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 They are not talking to me. They are not talking to me. Yes, thank you very much. And this basically is what I would want them to hear. So I would want to share the sound as well. Share sound. Okay. Great. So, ladies and gentlemen, first of all, are you able to hear Mwalimu? The total profit for the segments. Number 4, it's about the assets of the segments. Then we have liabilities of the segments. All the other points that we have read there are good, but not very important, because most of us, including myself in an exam situation, I'll not be able to remember that. I'll not be able to remember that. Great. Now, the most important thing for your exams that you're supposed to pick, ladies and gentlemen, is here, the format of operating segment report, format of segmental report. So you have to show the total revenue. So total sales for each segment. And of course, if there were any inter-segment sales, those are fake sales. Inter-segment sales are the same as what we call intra-sales in group accounting. In group reporting, intra-sales, sales within the group are fake. So the intra-segmental sales, ladies and gentlemen, must always be subtracted as per the format here, must always be subtracted for us to be able to gather the sales to third parties, the sales to third parties. So then we have another thing that we have to disclose is this operating profit, which is segment profit, very important for each segment. And then inter-segment profit must be deducted for us to get profit from what here, somebody from third parties. And then we have other items where we have interest income, we have interest expense, and then of course you can see here we have profit before what here? Before tax. We don't bring issues of tax in segmental reporting. And then, of course, we have the segment assets. We have the ones which are identified for each segment. And then we have the unallocated assets, which we are not able to allocate to any here, which will come under capture here. And then, of course, you give us the total. And then we have the segment liabilities, the same approach, identified liabilities. And then we have unallocated what here? Liabilities like that. Great. So the key thing here that I forgot up here, after you get profit on sale from third parties, we have what we call other items, where you slot in the interest income, which is positive, and then we have the interest expense, which of course will be captured here as a negative because it's a cash outflow, very important. So let's look at this illustration. The following information was extracted from the books of Kerenga Limited for the year ended 31st March 2017. So you can see sales. They're giving you sales in form of what here? Their segments, food products, plastics, pharma, others. Expenses the same, like that, others. General operating expenses and other items. We have income from investments, and then we have interest expenses. Then we have identifiable assets for each of the segments, and then we have the general what here? Assets. Then they have given us additional information. Inter-segment sales for the year ended 31st March 2017 were as follows. You can see them there. And then number 2, we have operating profit included shillings 33 million on inter-segment sales. Information about inter-segment expenses is not available. Required segmental financial information according to IFRS operating segments. So, ladies and gentlemen, I'll be able to answer these very fast. So then what do? We have to know the names of what here? We must know the names of our, what here? Of our segments. So our segments, what do we have here? We must know the names of our segments. So our segments, what do we have here, ladies and gentlemen? Our segments, what we have here, our segments, I can see we have food, we have food, we have food, we have food segments, we have plastics. I should not have written at the corner there so much, no. Should at least leave some space there. So we have food, we have plastics, we have a farmer, and then now we have what has been aggregated together, they're the small ones, as others, and then of course we have what here? We have the totals. So these are my segments. Those are my segments. So we begin with sales, as we were told up there. Remember the format. As we were told up there, I would want us to begin with the sales. So the sales, ladies and gentlemen, the sales, what do we have here under sales? If I share these with you, the sales, they are telling us sales, we have here the total, the segment sales, So sales here, we have the segment sales. So we have the segment sales. So please write like that. We have the segment, now you have to write. So we have the segment sales for each segment. So the segment sales, what do we have? You've been told food is 56.50. Plastics, what do we have there? 625. Plastic 625. We have a farmer 345. We have others giving us 162, and then the total of this food gives us, we're given this figure, if you're able to see, 6782 like that, 6782. So first of all, right up to there. Segment sales. So as you write, it will be very important for us to come and subtract intersegment. Intersegment is fake. Intersegment, that is a segment, sales between segments. You can't count that really as genuine what here? As genuine sales. So we must come and subtract the intersegment sales. So you can see them here. They gave us the intersegment sales in the additional information here. So food 55. We have plastics 72. We have farmer 21, and then we have got others giving us 7. Please write up to there, and then if possible, please go ahead and add for us here to get the total intersegment. 55 plus 72 plus 21 plus 7, which will give us 155. So please subtract like that. Now for you to be able to give us the effective sales or sales to third parties. Sales to who? To third parties. So sales to third parties, what do we have there? Sales to third parties, what do we have there? Sales to third parties, please subtract for us. So we have here 56.50 minus 55, giving me 55.95, and then we have 625 minus 72, giving me 553, 345 minus 21, giving me 324, and then we have 162 minus 7, giving me 155. Then we have 67.82 minus 155, giving me 66.27. So remember that these figures are an end by themselves. They are an end by themselves. So you need to come and do what here? You double underline them. Like that. So that is the first disclosure up there. The first disclosure up there, that is the end of that area. Now from there, the other thing that we need to disclose, ladies and gentlemen, is our operating what here? Is our operating profit. Is our operating profit. So operating profit, so come here and give us another section for operating profit. Operating profit, if you are able to remember from your AFM, operating profit is profit before interest and what here? Tax. Is profit before interest and taxation. Profit before interest and what here, somebody? Profit before interest and taxation. So don't bring issues of interest here. Don't bring issues of taxation here. So I want to share my screen with yourselves, and ladies and gentlemen, we get to pick this. Yes. So like now you can see here, how do we get the operating profit for segment number one? For segment number one, look here. I happen to be having, like if it is food segment, I can see the revenue for food is 56.50, and I can see the expenses for food, they are 33.35. So you simply subtract the two, 56.50 minus the total food expenses. So, ladies and gentlemen, you take 56.50 minus 33.35. So 56.50 minus 33.35. If I do that way, I will be able to get the operating profit for food. Operating profit for food is 23.15. Remember, to get operating profit, I'm repeating this again. They don't want us to show these expenses here rightly on the face of this. They only want us to give them the operating profit, which is revenue minus expenses, minus cost for each segment. So, ladies and gentlemen, if that is the case, please go to the next one. The next one, what are they telling us? The next one is here. You can see the next segment is called plastics. So you pick 625 as the revenue for plastics minus 425 as the expenses for plastics to get operating profit. So we have 625. I hope you are able to follow. You take revenue of plastics minus revenue of plastic is here. Plastic revenue minus the plastic expenses. So 625 minus 425, that gives us, ladies and gentlemen, that gives us a cool 200. That gives us a cool 200. How about pharmaceutical? Pharmaceutical revenue is 345. So we have there 345 minus the expenses of pharmaceutical, which I'm able to see is 222. 222 like that. So from there, ladies and gentlemen, I'll come and mention there 123. So how about other revenues? I can see 162. Other revenue, I can see 162 minus 200, which gives me minus 38. So I'll come and mention here minus 38 like that. Minus 38. So then it will be very important for you to now come and give us, the total operating segment for the entire organization, the total operating profit here for the entire organization, which will be as a result of you adding now the 3. So you add the 4 actually. So we have 23.15 plus 200 plus 123 plus, of course, we have this, which is a negative answer like that. So then what are we getting here? We are getting 2,600. Ladies and gentlemen, remember, the moment you get this operating profit, what are you against also? You are against any segmental, intersegmental profit. So again here, come and less any intersegment profit, less any intersegment profit, we less any intersegment profit. So look for intersegment. Why should you generate profit from your sister section? From your, segments are related. We should not be generating profits from them. So ladies and gentlemen, when you look at this table very cleanly, the only thing they've told us here in note number 2 is that the operating profit included 33 on intersegmental sales. So this 33 is a total of the intersegments. They have not allocated this 33 to any particular segment. So this 33, ladies and gentlemen, will be subtracted here. Remember, this is what here, somebody, this is for the whole company. This is for the whole what here? Whole company. Whole company. So there is nothing given here. There is nothing really given there. So I need, ladies and gentlemen, to come and subtract. Why am I subtracting? It's because they've told us that there is an intersegment profit of 33 included here. Look at note number 2. Look at note number 2. If you have your paper, look at note number 2. Look at note number 2. Look at note number 2. Note number 2, they have told you, if you have your paper there, if you have your paper there, look at note number 2. Let me just share this. Note number 2, for you to understand that really that amount is included. So we are told the operating profit included shillings 33 on intersegmental what year sales. It includes, so we need to come and subtract. So we need to come and subtract. So when we subtract, what shall we be getting? When we subtract, in this case here, what shall we be getting when we subtract? So we have 2600 minus 33. So, ladies and gentlemen, this gives me 25, 25, 67, 25, 67. So 25, 67. Now this automatically is now my profit. It is my profit to third party, or profit from third parties. Profit from third what year? Profit from third parties. Profit from third parties. Now, after that, ladies and gentlemen, now that you are through with this, now that you are through with that, the next thing, remember, now you need to bring what we call the interest. Remember, whatever you have, ladies and gentlemen, here, whatever you have, ladies and gentlemen, here is profit before interest and tax. Now you need to come and bring on board issues of what here? Issues of interest. But how do we bring them on board? Under a special column called other items. So you come and mention here other items. So other items. So other items, you'll always get that column, that area where they capture the other items for us. Like here, they have captured the other items here. You can see a place where they are telling us other items. Other items, if you're keen, you'll be able to see them. Other items, you can see general operating expenses, income from investment, and then we have interest expenses. So you bring them like the way they are. So we have the general operating. We have the general operating expenses. They're giving us a figure of 562, a figure of 562. And then we have another item called, so this 562 is a deductible. You need to deduct that. And then they're giving us income. Income is another item, another item here. They're giving us income from investments, income from investments of how much? Of 132. I hope you guys are able to see this section. 132. And then we have interest expenses. So this, of course, will be positive because it's an income. Then we have interest expenses of how much? Interest expenses of 65. So you can see, ladies and gentlemen, that these expenses, first of all, they're supposed to be captured there as negatives. And then you can see, first of all, that, ladies and gentlemen, all these other items, none has been allocated to the segments. So you're basically taking them to the company level, So I would want to take a small breather for you to write something, So please try to write up, try to write. Very interesting stuff. Very interesting stuff. Very interesting stuff. So a minute you finish writing. A minute you finish writing. A minute you finish writing. The other items are very important. Other items are very important. So there we are. Please come and deduct these two from this. And of course, you add this for you to be able to give us what we call the profit before taxation. the profit before tax. So please subtract. So we have there 2567 minus 562 plus 132 minus 65, which gives us 2072. 2072, and now I'll come and double underline. That marks the end of that particular working. But I'll still continue with my statement, because now, after I finish with my, what I'll call the income statement, now I need to go and look at the asset side. So the assets, so somebody go there and mention assets. Assets, my board is quite big. I hope it will be able to allow me to finish here. So the assets, first of all, you give us what we call the segmental assets. What has been identified? Give us the segmental assets. Give us the segmental assets. Give us the segmental assets. What has been identified? The segmental assets that have been identified. The segmental assets that have been identified. I like this topic so much. So go and look at the identifiable assets. I hope you're able to see them here. So we have identifiable assets. So identifiable assets, identifiable assets. Basically, these are the segment assets. These are the segment assets. So segment assets, what are we able to see here? Segment assets, I'll write them very fast and then you'll come and pick them up. I'm able to see the identifiable assets. Food, 7320. Food, 7320. Food, 7320. Right? We have plastics. Plastics, how much? 1320. Plastics, 1320. Then we have pharmaceuticals. Pharmaceuticals, identifiable assets, 1050. 1050. 1050. And then we have, ladies and gentlemen, the last one, other segments. We have 660 what here? 665. And then now we have the general assets. General assets now are the ones we call the unallocated or unallotted. They don't belong to any segment. This perhaps are, ladies and gentlemen, these unallocated, which are 722, perhaps these are the ones which are lying at the head office. But first of all, before I do that, it will be very important for me to give you the groups what here. So we have 7320 plus 1320 plus 1050 plus 665. You say equals. I'm getting here 10335. And then I'll come and give me the unallocated assets. Unallocated assets. Unallocated assets, what do we have here? Unallocated assets, which fall as under the head office, the general assets here are 722. So 722. So please come and add there everything. Come and add there everything. Please add everything there. Please add everything there. Add everything there for you to be able to give us, the total what here? The total assets. For you to be able to give us the total assets. Give us the total assets. Give us the total assets. So total assets here will be 10335 plus 722, which will give us 11,077. Now, ladies and gentlemen, remember that this particular what, ladies and gentlemen, these particular segments, there is nothing like what here 11,077. I hope you are able to write it well, 11,077. There is nothing like balancing. Unfortunately, there is nothing like liabilities. I would have brought them, but there is nothing like liabilities. So I end my statement there. And of course, I want to believe that this has been a useful class, that you guys will be able to do what here, to follow it up. And of course, ensure that you bring your students, colleagues to this particular RCM online platform. We will never disappoint. We'll never disappoint. Great. Let me just put it off. Okay. Now, ladies and gentlemen, we've come to the end of that particular presentation. I'm so sure you must have picked a few things here and there. And the major thing that you must have picked out of this illustration is that when you are doing segmental reports, anything that is internal, like internal sales, it must be subtracted. Anything that is unallocated, not allocated to the segments, we normally take it to the whole company column. So anything unallocated, you take it to the whole company column. Don't apportion it to the segments. And of course, there are very easy marks there, low-hanging fruits marks that you should be able to start by even harvesting, like the marks of getting the assets, segment assets, unallocated assets you put at the corner, segment liabilities, unallocated liabilities at the corner. So when we come to the next class, ladies and gentlemen, we shall be able to look at a past paper question. We shall be able to look at a past paper question. Now, before I answer here, it's important I come and stop recording. In our discussion, when we were doing the profitability tests, the profitability check analysis, that is when we were omitting the loss-making segments. In this particular question that I've just done, ladies and gentlemen, there is nowhere where we were required to do any test. They gave us segments already. So we're not doing any test to be able to tell which segments are reportable or which ones are not reportable. We only omit the loss-making segments whenever we are doing that reportable segment test. Are we together, D? D, are we together? D, okay, great. Any other question? Please don't go without asking questions. Remember the intersegment, anything that is intersegment. Anything that is intersegment must always be done water deducted, because just like, for example, in group consolidation. In group consolidation, when you are in section 3, intermediate level or semester financial reporting, what were we doing with intra-sales? Intra-sales, we were saying it's fake, it has to be deducted. Because we only consider things which are from third parties or to third parties. Anything that is internal must always be eliminated. Just for example, if my wife this evening was to tell me, Mwalimu, you know what? Give me 10,000, I will refund. Now, when I'm recording my liabilities, will I book these 10,000 sheets that I've given to my wife? Will I book it as a liability? Will I book it as a liability? Somebody talk to me. The 10,000 that I've given, of course, I must give it to her. Will I book it as a, when I'm counting my liabilities, will I book that as a liability? Will I book it as a, forget it, right? Because of what here, ladies and gentlemen, that is an internal item. It's an internal stuff. But when I was trying to ask around, somebody told me, Mwalimu, you know what? If it is my madam who gives me the money, should I record it somewhere that I have to pay this amount back? Should I record it that I have to pay this amount back as a husband now? Should I record it like I have to pay this amount back? Atari kwenye lango, eh? Otherwise, ladies and gentlemen, I take this opportunity to really appreciate you. Good questions are coming over here, which I would want to really elaborate on them when we meet. Because there is a class that I have which is supposed to be starting at 4. I'm 3 minutes late. But most importantly, for those students in this case who would want to join us for advanced financial reporting classes, please don't hesitate. This is our number. Don't hesitate at all to join us. This is our number. Our number is 0719 525,000. Remember, most of the things you guys are asking will become clearer when we do like 2 or 3 past paper questions. Yes, we have a WhatsApp group. For those of you who are in foundation level, please call us. Call this lady or WhatsApp this lady. She'll be able to add you up. She'll be able to add you up. Otherwise, it has been a pleasure hosting you this afternoon. It's my joy. And I hope, ladies and gentlemen, that you have also enjoyed being with me this afternoon. Otherwise, bye-bye. Great. Great. Thank you very much. Next class with us. Let's talk on WhatsApp. Let's talk on WhatsApp, but please make sure you register. Let's talk on WhatsApp. Let's talk on WhatsApp. And most importantly, it is the practical things that I bring to class which make my students to really like us. Lucy Allen, Lucy Allen, anajua mambo ya online classes. The online classes, they're supposed to be mobile. Lucy Allen anapiga raundi kabisa, which is good. Great. Thank you very much. I'll be able to give you even 2 sessions a week. By the way, once we agree, I'll be able to give you more sessions. Bye-bye. Great weekend too. Bye.